Right, task 1.5. Here we are. So task 1.5. Now, I think, oops, sorry, task 1.5. Let's just get there very quickly. Yes, here we are. I think we must now observe that we have moved into discussing companies. So there's a difference. First of all, you cannot prepare accounts for a period longer than 12 months with the company, right? Remember that with the sole trader, it's different. We talk about basis periods, and we sort of the first period is typically a short period. I mean, so it's different for a company. So maybe that's something to highlight here. So for the company, you can only prepare the longest period you can prepare is 12, and then you can have shorter periods, but you prepare if you see a long period. Well, what you do is you prepare a first accounting period, which is 12 months. In this case, the next accounting period would be 3 months. So if you look here, what's really happening is that the client has prepared a 12-month period from let's just clean that up, first accounting period from the 1st of October 19 to the 30th of September 20, and prepared another shorter period from the 1st of October 20 to the 31st of December 20. So you have two periods, a 12-month and a 3-month period. Now, the general premise is that these trading profits have been earned over 15 months. So what we have to then do is sort of say, well, what is 12 months of that times 238, 350? And in this regard here, we will have 3/15ths of 238, 350. Same thing will apply, of course, to the bank interest. We will have 12 months over 15 times 3,525, and we will have 3 months here as well, 3,525. The question does tell us that the rental income is received throughout the period, so as well we will also have 12 over 15 times 12,750, and we will have 3 over 15 times 12,750. But these events where we have dates where we're told, so for example, where you have a chargeable gain or you have a gift aid donation, you will work with that based on the date. So you won't spread that because that happens. That donation of 5,200 is made in that period. So what we will now see, if you like, is here is that we will work out everything. Let's work all of that out. So we have 12/15. So I'm just going to erase this and just write the actual because I calculated them. A second. Just... Excuse me. So I'll just put the right figures in there now that you've seen me do the numbers. I'll just put the numbers, the actual answers in there. So when I do that now, I should be sitting with 19. Oops, sorry. 190680 here, and 47,670, 2820. Of course, you've done the same. 705, 10200, and 2550. So let's add all of this together. 190620 plus 2820 plus 102 will give you 203,700. Now let's do this one. 47,670 plus 705 plus 2550. Take away the 5,200. Leaves us with 45,725. Right? And that's where we are. I believe, yeah, that's really it, really. Well, I don't think you had to do the calculation. You just had to just put these figures in, if you like. Now, in terms of the corporation tax payable, corporation tax has always been, for you guys, will continue to be at 19%. So If I multiply that by 19%, I will have 868. I'll round that up to 8688. And if I do the same of 18% times, sorry, it's not 18%, 19%, forgive me. Did I write 18 and say 19? So 19%. So let's just do that again and just be clear that I got that right. 45, let me just do this first. 45,725, yes, 45,725 times 19%. Yeah, I got that right. Sorry, I said 18. And do the same thing. 203,700 times 19% takes us to 38,703, right? Because the corp tax is at 19%. It doesn't really matter. It's always at 19%. Whether it's 19% for the on the amount, however much it is. So even though this is a 3-month period, it's still 19 because that's if you like, you earn these profits in 3 months, so you will multiply that by 19%. Now, this question here says that here's your trading company. There's an accounting loss for the year. So imagine you'd made this loss. I'm just going to call that X, and then you'd also taken off a depreciation charge of an additional loss to that, and you arrived at a final loss of 48,950. So you had a loss which got worse by depreciation. That's what's really going on here. So the question here is, what was this loss? So you had an initial loss adding on this loss to get this loss. So in effect, you're really subtracting the two things, aren't you? So you have 48,950 minus 12,750. 48,950 minus 12,750, which gives you 36,200. So really, we have an allowable loss, a real taxable trading loss of 36,200. Great stuff, and that's task 1.5.